Hi, this is Joseph. This is a quick update during the New York trading session. It is Thursday, it's October 22nd, and I wanted to address a couple of emails, so I'm going to try and open up my charts here with the euro dollar. This is the euro dollar daily time frame. So initially, with the London Open, very often I'm going to get some kind of a setup. Not all the time, but as many of you probably already know, that during the London Open, that first hour, especially with the New York session, sometimes you can track the price action after the first hour prints, and you're going to get some kind of an opportunity. Sometimes it's a 5-minute bar, sometimes it can be a 30-minute setup. In this case, though, I'm looking at the 1 hour chart because I can see that for the most part over the last couple of days, even though there's been some hours, 1 hour candle that might produce some decent volume and participation, ultimately they're not going too far. So this trading range, while it looks like it's moving around quite a bit, is relatively small. And you can see that over the last few hours here, that things have just been going sideways, and these ranges, these price swings are just getting tighter and smaller. When you see that kind of price action, I generally stay out of the way. That's usually when you're going to get that choppy sideways, price action. You'll grind away at your account if you try to take every little, candlestick pattern on a 5-minute bar chart or candlestick chart, whatever you're trading off of, and it can create, a situation where you end up with more losses than it's worth in a situation like this. If you can detect that things are likely to go sideways and there's not a whole lot of participation at this point, it's best to just stay out, because you're ultimately, eventually, the market is going to give you a trade, and then you're going to find a better opportunity, which is going to be the trade you're actually looking for. And instead of replacing all those losses, because a lot of people get bored when they're watching 6 or 7 hours of time pass. I know I used to do that when I first started trading. So when I first started trading back in 2001, I was trying to trade everything. Like it was ridiculous and it was pointless, and all I did was grind away at my trading account. And I put myself in the position where when I finally found the right trade that I was looking for, because I couldn't stay out of the market prior to that moment, all I was doing when I found the good trade was just replacing some of the losses. So you don't want to do that. I don't do that. I wait until I get the right setup. And so that's why you really haven't seen anything as far as a trade executed over the last couple of hours here, or last few hours, except for what I had with the London Open. So if I go over here to this candle right there, it's a bullish candle. That is the 12 a.m. That's California time. I'm on the Pacific Coast. I'm in California. And when the London market opens, that's 12 a.m. It's actually 3 a.m. New York time. I'm 3 hours behind for those of you who are, outside of the United States. So this is when my trading sessions, for the most part, start. I will track the behavior and watch and notice how price reacts after that first hour has printed some kind of a candle, whether it's a candle or a bar chart. And then I wait for my opportunity. And you'll know that here, if we take a look at the lows here from about 38, 37, we're looking at a low at about 11. So it really isn't going very far. Today's trading range is relatively small. So again, when I refer to these charts and these time frames, very often I'll say, if you're looking and waiting for a trade with the trade copier, take a look at the daily time frame or take a look at the 1 hour chart. And if you see this kind of behavior, if you see that for the entire day it's only moved, let's say 30 pips or barely 40 pips, there probably isn't going to be too many opportunities. I did get one to short it here, but again, I have to be quick. I have to get in, I have to get out. And for those of you who are curious and have asked me many times, what kind of trading system do I use? Is it manual? Yes, I manually execute each one of these trades, and I primarily take the information that I see on the bar charts with volume. I'll show you my volume charts in a moment, and I look for entries on the point and figure chart. So very often I'm going to get entries with the point and figure, and I'm calculating based on the data that I have and how I construct my point and figure charts where my take profit targets are, so that way I'm not holding on to trades too long. Very often, people have really misguided ideas initially when you first start trading. I know I was one of them. I used to do the same thing. I would want more pips. Let's say I was up 20 pips and I would think, wow, this is great. What if I could get 50 pips, or what if I could get 60 pips? And a lot of times it wasn't really even justifiable. It was just that I wanted more, and I didn't have enough experience at that time to know how far price was likely to go based on the amount of participation and the volume that I see for the day. And again, the point and figure, it helps me determine, the way a lot of people refer to it is, it helps me determine how much fuel is in the tank for some kind of a move. Now, I might get a second opportunity to short this if price continues to move down, but let me show you my futures charts. So my futures, I go over here. This is a third setup that I look for. Not only do I look for the overall structure, the price structure, areas of accumulation or distribution, depending on which direction I'm trading it in on the bar charts, but I'm also looking at volume. So you can see over here on the left-hand side, this is futures. This is the Euro futures, and I've got volume. So this is not tick volume. I get this question quite a bit. Am I using tick volume like with the MetaTrader 4 platform? And no, I don't think that that's reliable. I would not. I refuse to look at it, and I would only recommend looking at futures volume, true futures. So here you can see this is the same 1 hour bar chart, Euro, but now I've got futures volume here. This is actual volume. This is a volume average. You can see the average running through there. At this point, since about 5 o'clock California time, which is 8 o'clock New York time, after that drop, when I got out of that trade, things just went sideways. And there's no reason for me to hold on to the trade. There's no reason for me to put on any other trades. And I can see that volume levels are sort of flattening out here. And ultimately, there isn't any reward based on the amount of effort that I see on any of these candles, whether it's bullish or bearish. So there's always the concept of effort versus reward, the amount of effort or participation or the volume that we can see versus how far price actually goes. And if you see price and a lot of, let's say, volume, but price isn't going anywhere, it's likely to not break out at that point. You have to wait. You have to give it some time. Eventually it's going to, but you can clearly see it's just going to move sideways, and every hour after that, each one of these candles has been relatively smaller than the previous one for the most part. And that's happening for the most part across the board with Forex. So I'm just going to have to wait. I don't know if I'm going to get another trade before the end of the New York session close. If not, I'll just have to come back and just hit it again at the London session. So my two primary trading sessions are the London session and the New York session. So again, I'm going to get good opportunities sometimes, and every day is different. This is the one thing that I want you to keep in mind if you're going to use the trade copier. Every day is different. So a couple of weeks ago, actually about 3 or 4 weeks ago, I had some trades on the pound. And the pound, let me go ahead and tighten this up. This is the pound here, and this is the 1 hour time frame. But if I go back over here and tighten up the charts, and let's say we go to this trending environment here, there were days where I was able to get 40, 50, maybe even 90 pips on some of these trades. And again, that's not really developing here just yet. You can see here, if I go back to this was September 25th, and then we've got this is after the weekend, so this is the 27th, and we had this move here. This produced about 90 pips on a trade that we executed here with the trade copier. So it does produce opportunities. The system does produce opportunities. It's just that this is the cycle that we all work within this kind of behavior. We get trending moves, and then we get the consolidation, and then we get breakouts, and we get more trending moves, and we get consolidation. And you just have to wait for it. At this point, if I go back to where we are presently, you can see that all we have right now at this point after yesterday's move to the upside is more consolidation. So there really isn't anything for me to do at this point other than to just wait for another breakout or maybe a retest of a old support level and then maybe move back down. Whatever the case is, I'm going to be able to confirm it here and then execute based on the point and figure setup that I get.